Well, thank you all very much. I'm delighted to be here today and to share what we've been up to at Zefiro. The visual here with the sun coming over the mountain is not accidental, and it really does symbolize for us that we are entering a new phase of growth at Zefiro, which I'm very excited about. Just by way of background, I've been on the Zefiro board since the inception of the IPO, which was in April of 2024, and was asked to step in as CEO last June, and which I was very excited to do because the overall thesis and opportunity in environmental services, particularly as it relates to methane abatement, which is what I'm here to talk to you about, is as strong, if not stronger than ever. I will say that the motivation for the board asking me to step in as CEO was because there is such a tremendous opportunity in this space. But the company had to really reevaluate a year ago kind of some of the ways that we were going about attacking that opportunity. And really, it was along a couple of axes. One is that we needed to really refocus and take a hard look at what is the main driver of revenue in our business, which is fundamentally the need to plug end-of-life orphaned oil and gas wells. And I'll explain why that's such a compelling imperative. But we also needed to align costs and really be surgical about how we were looking at where we were spending money, how to go after the revenue opportunity, and also align our balance sheet with the opportunity. And so we've been very disciplined over what is now almost a year. And the results have spoken for itself. So we've now had the first three profitable quarters of the company's history since last June, and we've been able to increase revenue substantially. Very excited about our recent private placement, bringing in European investors, and a very strategic acquisition that we just closed in early May. And so the foundation of the business from a financial perspective is something we've really focused on over the last almost year to really be able to then build on that to catapult us forward to growth, which is where we are right now. So why are we here talking about methane abatement? So Zefiro is an environmental services business, and we are laser focused on this issue of oil and gas end of life well plugging. Most people have not ever heard of this as even a need, but I'm personally very partial to businesses that actually address a very critical need because then you're always going to be able to grow the business in that. And this is where we are with end of life oil and gas wells. So I think there's two ways to think about it. One is in the normal course of an exploration and production company in oil and gas. Wells that they have drilled eventually deplete. And so most places in the world, there's regulation that requires the corporates to plug those wells. That's where the sort of business of Zefiro started through our subsidiary plants in Goodwin, just doing work for the end of life abatement of end of life wells. The other part of it, though, is maybe less understood, and that is that in the United States, and also many other parts of the world, but in the United States, the first wells were drilled in 1850s. The regulation around what to do with depleted wells didn't kick in until the 1960s. So we had over 100 years of people basically walking away from the when wells kind of got to the end of life and just left them there leaking into the water table, leaking into the air, and so on. In the 1960s, the regulation began to require corporations to plug their end of life wells, but you still had millions of wells as a backlog that were just sitting there. And also, when corporations, if, in some instances, would go bankrupt, those wells would again just sit there and not be plugged. The result is that in the United States, we've got estimated around 4 million of these orphaned wells in 26 states where there was energy production. And they present a real hazard. There is an issue of every so often you'll hear a news story of a home in Texas or in Pennsylvania or someplace like that exploding. Almost always, that's because there was a leaking well in proximity to that home. It's estimated that about 14 million Americans live within a mile of a leaking orphaned well. There's major health issues that come along with that, in addition, of course, to things like houses blowing up, water table being destroyed. And so the result is that this is one of the very rare topics in the United States where there's very, very strong bipartisan support to solve the issue. So under the Biden administration, there was $4.7 billion allocated to begin to address this problem, which is estimated just on the orphan well side to be between 400 and 600 billion dollar problem. So it's a drop in the bucket in terms of the dollars, but it is the first time that federal dollars have been allocated to address this issue. When the Trump administration came in, we were obviously keenly interested to see whether or not they would continue to support the distribution of that $4.7 billion. And in fact, they are, and also reduced the red tape for the states to actually access the funds. And it's interesting, I think, because on the Biden administration, the impetus was primarily environmental, which is obviously really important. And methane is estimated to be about 80 times more potent a greenhouse gas than carbon dioxide. On the Trump administration side, it's much more focused on business development and the impediment that it is to have all of these orphan wells in the country, particularly for infrastructure development, which has been an interesting evolution in our business as we get called to plug wells as people are building out infrastructure, whether data centers, whether LNG terminals, and so on, because these wells are everywhere. Not to mention there's the health issues that are on interesting to both sides. So we're in a situation now where we have the opportunity to plug wells for corporates, which has been historically, a number of years ago, 100% of the business. Now that the state and federal funds are coming through, it's moving to be closer to 50% of our business working for the government programs. And as mentioned, we also have infrastructure projects that we're now getting called on to do, which have been very interesting and a growing part of our business. We do also generate carbon credits in the instance when we adopt an orphan well to be able to abate the methane. It's a much smaller part of our business. It's a nascent part, and I'll go into more detail on that. But the fundamental focus is we plug oil and gas wells, which is a problem that really needs to be solved. So the business historically was focused in Appalachia, which was where the original wells in the 1850s were drilled, and there continues to be a very, very large need for the abatement of methane in that area. But we've continued to now march across the United States into different states and definitely have an eye on Canada, which has a very similar profile in terms of the opportunity. It is a global issue, but our focus right now is being the largest and most profitable methane abatement company in North America as it pertains to oil and gas wells. We're one of the few companies that has been able to monetize carbon credits in this space. The American Carbon Registry is the entity that has created the methodology for orphaned wells. They're now in the process of revamping their methodology, and they've leveraged our team because we have some world-class experts in that space. And so we're looking forward to that methodology being completed this summer and being able to get back to the monetization of carbon credits. And we've been able to monetize those credits with institutional buyers like EDF, Mercuria, and others. And we are seeing an increase in the demand for methane abatement carbon credits. So while it's a very small part of our business today, we expect it to be a growing part of our business. I think one of the most important things for us is the barriers to entry. So I often get asked if the government is spending $4.7 billion to plug oil and gas wells, why don't we all just buy a rig and go get those plugged? And the answer is it's a complicated and dangerous business is part of the answer. So having deep expertise in understanding how to approach these projects is important. You can think about the business in basically bifurcated into two different areas. As I mentioned, the corporate side of the business, that tends to be much more cookie cutter, simple approach to plugging wells. And the competition in that space is much more large companies that do oil field services work. And this is something that is a small piece of their overall business, not a focus. And in that, they tend not to be able to provide things like project management services around that. It's much more they get a phone call from a corporation and they get asked to come in and do a small piece of a bigger project. On the orphan well side of the business, the government work, that has historically been very much a mom and pop, two guys with a rig that go out there and do that work. It's much more bespoke. And as you might imagine, if you're dealing with a well that maybe was drilled in the 1930s, what you are encountering, there's not good records for it. And so it requires a deeper level of depth of knowledge and expertise to do that. We often find ourselves plugging wells 3 feet from someone's home or through a protected stream. And so to be able to deal with all the nuances of the different kinds of projects and be able to provide full suite of services, project management, the cementing, the ability to build roads to get to the place where you're going to, and so on. Um, as far as we know, we're the only company in North America that does the full suite of all of these projects. And we're seeing that being a big differentiator for us. The other thing that we're finding is both with corporates and with the governments, things like health and safety records, which we prioritize, is very, very important. And we've also developed our own internal training program because there is no trade school to teach people how to do this work. There is no union that has an apprenticeship program. So we've developed a very elaborate program to be able to train up workers, and we need more and more of those in this space. And so where we do see industries declining, maybe AI is displacing workers and things like that. We're in a growth mode, and we're able to train workers in what is very, very lucrative work for people. When you think about Appalachia being our focus area, the average family income in that space for a full family is about $45,000 a year. Our entry level positions for somebody who just graduated from high school is $75,000 a year. So it's very lucrative, and we're able to develop a really competent workforce as a result. Our historic footprint is here. You can see that in the Appalachian region, the dark blue. And then we've been able to organically grow into the light blue states. We just completed, as I mentioned, an acquisition of another company that is very accretive to our business. That brings us into the green states. And then the light green states are really the opportunity in the United States for further growth in the business. And we do have very specific advantages on a state by state basis. So, for instance, we're the only company that is operating and certified to plug wells in the state of New York. So there are places like that where we have a monopoly, and then there's places where we don't, but we're very competitive. We've won at least 25% of the government contracts that we have bid on. And with more and more dollars flowing, we're seeing the supply and demand imbalance just growing, so that there's far more dollars going out to for bid for work. Just by way of example, the state of Pennsylvania, when before the federal dollars came through, only had $1 million a year, which plugged about 10 wells. Now, it's the state of Pennsylvania, through the federal program, has 80 million that they need to spend this year, next year, and the following year. And as a result, there's just simply not enough people to do the work. So it's a real growth opportunity for us. Another example there is the state of Ohio recently, earlier this year, had an RFP out just for a couple of wells, but it was a pretty complex process. And we were very busy at the time, but we decided to put a bid in just to see if get some market intel on what was going on there. So the expected price for that would have been for two wells somewhere between 100 and $200,000. We put in a bid of 900,000 just to see what would happen. We were the only bidder and we got the work. Now, of course, that doesn't happen all the time, but it does highlight that there's a real supply and demand imbalance in this space right now. Um, as mentioned, we have really focused on the fundamentals of the business, really strengthening the balance sheet, really being able to focus on profitability. And that has given us now the foundation from which to be able to capture a lot of these opportunities that are in the market. Um, our operating company subsidiary is a company called Plants and Goodwin that we acquired a couple of years ago. This is what's given us really this expertise. Plants and Goodwin was founded in 1970s. It was a family-owned business. Luke Plants runs our operations today. He's a third generation, grew up on a rig, but also went and got an MBA, was a military officer, is a very, very uniquely talented individual in this space, but is also, we've been able to build a team around him to be able to continue to grow. But you can see Luke came into the business back from his military career in 2018. This number would have been around 3 million at that point. The year-on-year growth continues to persist, and we expect that to continue based on the opportunities at hand. But this depth of experience and knowledge that comes with that is a real differentiator for us in this space. When Luke came back into the business and began to look at what the opportunity was, one of the things that he saw was this ability to project manage and do all of the different pieces of the business. In the history of well plugging is that one company had a rig and could do one piece of it. Another company would have the cement truck. Another company would have the yellow iron to build out the roads and do excavation. Another company would have the wireline service, which is basically explosives and the ability to do that. And then yet another company would be an engineering design company that would project manage and basically, move the people in and out. And what Luke saw when he came back to the business was that, first of all, there was a lot of inefficiency there. You ended up waiting for a lot of the next vendor to come and so on. But there was also the opportunity to internalize the different pieces of profitability and create a better end product for the client. And so that was really that growth in year-on-year CAGR is really a big part of it as a result of being able to do this full service suite of product. And that is a big differentiator for us. And what we found most recently with the acquisition that we did as we go and speak to the new clients in the new states, what we're finding is that is the differentiator for those clients. We had a situation just the other day where a client said, I have a number of wells, I need to get them plugged. I just don't have the bandwidth. They're all large oil companies, but they don't have, he said, I don't have the staff right now to be able to project manage it. And when we said, that's what we do, we can do that. We can interface with the states. We can do all the engineering work. They had to start the next day. And so it's the level of professionalism that we bring to an industry that just hasn't had that same focus and nor the experience. So that's been important. So this is just a very, very small sample of the different deals that we've won. $19.6 million state of Ohio project that we're starting next month. Another one that is not on this list that we just finished in Louisiana, which was our first Louisiana project, was an infrastructure project. As I mentioned, we've had calls from Amazon who was building a distribution center and couldn't get their building going because there were a number of orphan wells on the property. In this case, in Louisiana, it was a large LNG export facility, and they got to the project site. It's a multi-billion-dollar development that they're building. They couldn't build their project because there were 9 wells that needed to be remediated, and so it was the level of complexity of that particular project. For reasons of their build, it had the casings had to be cut 100 feet below surface. It was in the sort of marshy sludge of the Louisiana bayou. And so we were chosen to be the group to do that because it was a complex project. It was a $5 million project that we completed, and we completed it ahead of time. And so I think, it's very exciting for us to see not only a new area of business with the infrastructure, but also our ability to capture the revenue for really complex projects. So as mentioned, we really are excited about the growth into the other areas as well. All the states that have had oil and gas in development in them have allocation of funds. For instance, Texas just put out an RFP for about $100 million worth of work that we're excited to learn whether we won that or not. It's quite possible that they'll divide it up among others, just because 100 million is a lot of wells to plug. But we're very excited to see that the dollars are really flowing, and that the challenge for us at this point is really going to be to keep up with the work, which we're excited. That's a quality problem for us to have. As mentioned, we're excited to get back to the generation of carbon credits with the methodologies being finalized yet again this summer. I do think a couple things that I just wanted to highlight is we pre-sold the carbon credits that we sold to Mercuria, EDF, and others, and that was important because we wanted to not be speculative on what the price and volume was that we needed. So that I think is key. But the other thing that we're seeing right now is because of two things. One is the proliferation of data centers, and many of the companies that are involved in that line of business have really aggressive net zero goals that they've just blown right through. And so they're looking for ways to offset what is essentially natural gas generation. So having US-based carbon credits that are on methane abatement is a natural offset to that. So we're getting a lot of demand there. And the other area that we're seeing a lot of demand is because of hydrocarbons being exported to Europe, mostly LNG, with carbon tax, there's motivation that a lot of those companies have as well to neutralize the carbon intensity of their LNG. So therefore, a lot of demand there as well. So we're very excited about where this is headed. Again, right now, this is a very small, part of our business, but we do anticipate that in the years to come, it'll be a much larger growing part of our business that we're excited about. So in short, this has been an exciting run for us. The last year, as you can see, in the past 6 months, our share price has grown over 150%. And right now, our market cap is reflective of about a 1.5 times revenue, which I think from our perspective means that there's a lot of opportunity. But I think what really excites all of us on the Zefiro team is that this is a problem that is not going to be solved in this generation, the next generation, or the next generation. So we have a tremendous area for growth, a real opportunity to capture some really exciting business opportunities, but also while doing good. This is something that is tangibly and clearly making the world a better place, and so we feel good about what we're doing every day. So I'm happy to pause there and take any questions that people might have.
All right. Thank you very much for the great presentation. Catherine, I think it's a very interesting business model you guys have. And yes, there are quite a few questions. And I think we're going to start with the first one. Can you maybe explain in detail how it works to cap a well? You put the little half, how deep it is. Why do you buy oil rigs if you need to cap the oil rig? I mean, can you give us a little more details, please?
Sure. Yeah, absolutely. And I think this does speaks to why the expertise is so important, because um, states have certain regulations around how exactly to cap a well. And so typically what it is if you think about what an oil well looks like, it's basically a tubular piece of steel that goes deep, maybe thousands of feet into the ground, right? And so basically what you're doing when you're capping the well is below surface, you have to cut the well. And so the traditional way of doing that is to basically excavate around the annulus, and then using a variety of tools, cutting it, and then cementing to seal it. Now, I will say that that's like a very generic high level way of doing what we're talking about. But when you think about, for instance, like I mentioned, the project in Louisiana, that digging down was 100 feet. That's a serious project. we have developed and are working with other technologies. So, for instance, that even though that's the traditional way of doing it, we now have the ability also to use a laser to go inside the annulus and cut and be able to pull it out. So, in certain instances, that's a preferred methodology. So, we didn't have time today to talk about technological developments that make this even more efficient, effective, and important. But you can also imagine a situation where if you're doing something that is 3 feet away from someone's home, the ability to get this huge, heavy machinery into the space is a challenge. So we get asked the question a lot, like, well, what does it cost to plug a well? And the answer is, well, what does it cost to build a house? And the answer is, well, that depends, right, on how many bedrooms you have in the house or whatever. Same thing with the well. Are we capping it 100 feet below or 10 feet below? Was it developed in the 1950s or in the 1850s and so on? So it's a lot of very specific nuances that create the actual project plan for any particular project. Oh, Julian, you're on mute.
Yeah, my bad. This doesn't happen often, but thank you. And
Sure.
also, obviously, as you're bidding on contract and so on, I'm sure you would not go into the details of the cost of every single thing. I think that we can understand. But then, so once you cut it, what do? You put cement on it, then that stops the leaking because basically the leaking comes only from the well itself.
So, and again, this is where understanding the actual nuance of the well is important, because you also have to understand like where the geology and how things could migrate away from where it is. So part of it is actually understanding not just the well itself, but also what's happening under the earth there. So I'll give you just a quick example there. We were called by a UPS facility. People were getting sick inside the building and they couldn't figure out why. And they called, this was in New York, they called the Department of Environmental Protection in New York, and they determined that at some point in the past there had been an orphan well on that property, and they just they put a parking lot over it. They didn't seal it, they just put the parking lot over it. And all of that, the methane was then leaking out, going up into the building, making everybody sick. So our team had to go and excavate the entire parking lot, and then dig down and then seal the well in that case with cement. We also again on the technological side we're working with other means of things with biochar and so on that can actually seal better, and so that's a whole other body of work. But to be able to do that, and so in that instance is a good example of how the methane can also migrate to other places if the well isn't sealed properly.
Okay, well, very interesting for sure. And clearly, it's an operational play. You need to know what you're doing. You cannot improvise yourself a specialist in
Cannot
that
improvise.
field. In that regard, we have a question from Andreas here that's asking, you did a raise at one, you did an IPO, you did a raise. Are you going to have additional external financing needs within the next 3 years, or do you project to have any?
So that's something that, as we said, we just did a raise right now. We were able to deploy some of that capital very, very effectively. And so it's going to be a balance right now between organic growth and external financing. The short answer is in the next 3 years, yes, just because of the significant opportunities that we see to roll up additional companies and to continue to grow organically as well.
Perfect. Well, this is quite clear. One last thing. You said that there was a part of the revenues that is a kind of a peer-to-peer, business-to-business directly, either through
Mhm.
data centers, as you gave the example, or through bidding wars and so on. As there are more money coming in and more players coming in, do you see the price of it coming down, or having so many newcomers that one can see coming would have the opposite effect, that the people that do have the experience are in a position to charge more for the same work and then profit from their experience?
Right. In fact, there was just an article that came out about how much more expensive it's getting to plug wells in Texas, and so it's the latter. We're seeing right now because of the supply demand imbalance, the margins are widening, and the prices are going up. So I don't want to be predicting how many years to come that's going to be the case, but certainly in the near future, that's our expectation.
Perfect. Well, thank you very much for your presentation, Kevin. That was extremely interesting. A
Thank
very,
you.
very niche business model, but seems to be very efficient. So thank you for your time, and
Thank
we'll
you.
ask all our viewers to continue following your stories. So thank you
Thank
very
you very
much
much.
for being with
Thank
us.
you.
Thank you. Bye bye.